Hello and welcome to the Explain It podcast. I am your host, Ingryd Hernandez. Today we have a really special guest, somebody who I have started to partner up with here in Arizona, and he has an amazing story of how coming to America, like being an immigrant here, has brought so many awesome opportunities. I'm excited to have him on the podcast today. He just I think he might have accidentally stepped away. Um, oh, he will be right here, he said. Um, Anywho, yeah, technology, guys. The technology linking. Anyway, I am excited to share about this amazing opportunity that he has here in Gilbert, Arizona. If you guys don't know about Gilbert, I definitely welcome you to Google Gilbert and just how amazing Gilbert is. It's one of the leading cities to live in the whole United States. Extremely stable, a stable city. Sorry, I'm letting people on Instagram know they should come to YouTube and join the chat live. Um, so let's see here. Where has Manish gone? I don't know where Manish went. Okay, so we're gonna have Manish Pushye. Oh, there he is. Awesome.
Hey,
Hey, Manish.
how are you, Ingrid?
How are you?
Good.
I was just talking about how you have an amazing story of immigrating here into the United States, and now you're running an amazing fund called Awesome ROI, looking at
Yeah.
businesses and doing cool things specifically in Arizona. But you didn't start out that way, right? Like you have a you explored, you looked at the buffet of opportunities and then landed on businesses in Arizona. So let's talk a little bit about your origin story and how you ended up here.
Yeah, so I came the year 2000 as a software guy, and I lost my software job in 6 months because it was a Y2K based job, and Y2K was kind of turned out to be a dud. And then I started my own cell phone kiosk in different malls in
Mhm.
different part of the country, especially in Utah, Texas, New Mexico, Colorado, basically Southwest. And it went good. So that's what prompted me to keep going as an entrepreneur rather than working for someone else. And it turned out, then Amazon came into picture, then cell phone businesses took a hit. Yeah, but the journey kept going. I started other businesses. In the process, I end up doing a lot of convenience stores, gas stations, and other, and then I get into commercial real estate. I added few shopping plazas, hotel, motels, and all that. So
Yeah.
yeah, that was quite. But there were hiccups on the way. There were tough times, but at the same time, it went. Yeah, but the experience was really great, rewarding.
Yeah, very cool. So, um, I know that for people who make it in business for 25 years, you don't do that, nonchalantly. There's been, I'm sure there's scars and wounds and all the things that happen growing your business. So you pivoted from being a software engineer during the time of, oh my gosh, if people don't know Y2K, it was crazy. I remember my family was together for New Year's, and the thought actually went through all our heads that, like, what if, like, tomorrow doesn't come? Because everyone had, like, this fear of what the 1999 turning into 2000 was gonna be like. And if any of you in the chat are as old as I am, let me know what you were doing for the 2000 New Year's. We were at my mom's friend's house, and we were celebrating that New Year's, being super afraid of what was to come, and then literally nothing happened. It was just like every other New Year's we've ever had. But for you, having pivoted into entrepreneurship, Like, how easy or difficult was that? Like, to walk us through, because I came into real estate from a W-2 myself. And luckily for me, I was able to overlap the two things. It sounds to me like maybe you lost your job and had to figure something out. So, like, walk us through what that psychology was like.
Well, psychology is always, you always have fear of what's next, right? And how things
Mhm.
will turn out. But and the more you do any business or any new thing, the more you learn, and you fail, you learn, and then you don't repeat the part where you're failing. Correct? I mean, that's the natural process. But the fact of the matter is, there are businesses that did good for me, like e-commerce. It really started good during 2017, 2018. And then COVID, it really, even today, I'm still running my e-commerce business, but it never got back to where it was pre-COVID. Pre-COVID, I was doing it so good that every month I was buying some real estate, like whether it's a commercial or single family, every month, it was that kind of a boom. And post-COVID, it never, I mean, the logistics, whether you call shipping, logistics, or the commissions, or selling on these platforms, whether it's Amazon, eBay, or TikTok, Walmart, it's not as profitable because of competition and logistics and shipping and all that. It's not the way it used to be pre-COVID. So my point is, the name of the game is to pivot. If something is not working, you should be good in pivoting to the things that's working. Don't be obsessed with something if it's taking all your energy and all your timing. Yeah, I don't believe in that. I used to be loyal to my businesses, the kind of businesses pre-COVID, but COVID taught me one thing: you have to have diversification. You cannot
Man,
rely on.
I agree with that. I think this past year has definitely given me those lessons in that, like, what are the values and the things that I enjoy doing that I can do in different specific industries, right? So, like, me working with you more, by the way, guys, I'm working with Manish, and helping on the marketing side of things, on the raising capital side of things, and learning from Manish just how an amazing operator he is. I mean, you have like 72 employees, and, like, every day is it's so structured, which I really love seeing. But I was in a situation where I was responsible with connecting with people. I was responsible for raising capital for my deals. And I love doing that. Like, that part is like, I love hearing people's story. I love hearing how I can help them, grow their money, and through the projects that I was helping facilitate, and then mostly through flips here in Arizona. And then that kind of dried up. I mean, there's many of us, and I speak to a lot of people every week, and a lot of folks who are in the fix and flip game are struggling in Arizona. And don't let them fool you, because that is truly what's happening here. Um, and so, to your point, Manish, I had to think about, how do I pivot, right? And I had the great pleasure and honor to raise capital on a project I'm involved in Ohio, which was a mixed commercial deal. And just blowing my head, like, the last 6 months, finding out and understanding net operating income, how you can really pull so many more levers in other types of real estate, like commercial real estate or owning businesses, versus simply focusing on single family houses on either the fix and flip side or the rental side. And I was like, wow. In my head, I'm like, those strategies are really, or at least rentals are really, for like wealth preservation. They're not really to feed your family today. And so, working with you, you're helping me realize all of these things that are helping mature and evolve my understanding of what it takes to make it as an entrepreneur.
Yeah, and I agree. Completely. Ingrid, always I tell everyone, you should not think of expanding or doing big things until you are making 200K kind of annual money, and to be honest, 150 to 200K is, I tell people, first make that kind of money. How that's something you have to figure out. You have to work for someone, or you have to buy a business that makes you that kind of money. Then start off thinking of expansion. No, you cannot think of doing things from zero to overnight success. No, it does. I mean, I don't know. I have not experienced something like that with myself. So,
Yeah. Mhm. Not
and
that we want
the
to put limiting beliefs on people, because maybe
right.
you have the network and you don't even know it, and you kind of have to push yourself that way. But to your point, there's generally an evolution into those footsteps that you take on. So
Yes, yeah, and it has to be a good, reliable baby footsteps, in the sense you can expand. Now I have so many liquor stores, convenience stores, or laundromats and real estate. It didn't happen overnight. And in fact, when I was buying these real estates, and we all start with single family. Single family is the way to
mhm.
start, to be honest, in the real estate.
Single
Um,
family is the gateway drug to business. I always say that.
Exactly, exactly. If you are getting into a real estate, you have to understand the nuances, and that is easy to understand from single family investments and single family acquisitions. So,
Mhm.
that's how I started. But then I realized, I'm putting the same amount of time in single family when I can do that in triple net leases in commercial real estate. And triple net is really a name of the game. Like, you don't have to worry about insurance, you don't have to worry about property taxes, or maintenance or any of that. That all comes out of your tenant leases or pocket. You
Yeah.
even in the holidays, I'm doing lighting, and we are putting all those decorations in the plaza. Even that comes out of their pocket, so you don't have to put even a penny. And even multifamily cannot say that. Multifamily investors cannot even claim that they don't have any skin. They have to keep sending their handyman to fix the rooms or plumbing, or you name it. But in our
Yeah.
case, no plumbing issues. Everything is on the tenant. They are the
So
ones taking care of the situation.
let's educate the audience real quick. So triple net, meaning net, net, net.
Yes.
Net on insurance, meaning you're not paying the insurance, the tenant is. Net on taxes, meaning the
Yeah,
tenant,
property taxes,
the
correct.
property taxes, correct. And then net on maintenance, right? Then
Maintenance,
they're
yeah.
paying for the okay.
Or
So
HOA,
yeah.
or
Oh,
even
it's
HOA.
or HOA.
Yeah. So it could be
Oh,
maintenance, could be HOA. Everything comes out of tenant. You don't have to pay anything. So that's a big plus, because you are not owning some kind of a headache. You want something that run of autopilot. It run of its own. So these are the properties, whether it's warehouses or shopping plazas, they run off its own. You don't have to worry about it. The only thing you have to worry is outside landscaping, which is fine. That's not a big expense, and
mhm.
you already have a company who does that. So the and another thing is, if you can have your own business in those plazas, like one or two, oh my gosh, then you can increase the cap rate. You can do so many things and refi with the bank, even, and you can do so many interesting stuff if you can put your own one or two businesses in those plazas.
Yeah.
And the
Great.
reason I'm saying two, so that your manager can manage, and your cost of management is low, your cost of operations is low, and stuff like that.
Yeah. Very good. Actually, I remember trying to get into real estate investing, and the word cap rate would always throw me off. It would intimidate me. But now the way that I associate it in my head is like the higher the cap rate, the more value add uh, the deal has. Like you do have to kind of offset or be prepared. Like you have to do some sort of capital investment in terms of uh, leveraging what that property or business needs that would add to the net operating income.
Exactly.
Mhm.
So I say it like this: you have to buy cap rate is you have to buy higher cap rate businesses and you have to sell low. So it goes the other way. Like in stock, we could say buy low, sell high. Here it's
Mhm.
buy high, sell low.
Yeah.
And so I always buy businesses or real estate that's making at least 11, 12 plus cap. Otherwise, I don't even waste my time because it's not worth it. And then I do my math. How's the selling cap rate at the moment? If it's 8, 7, or you are already on the winning side because you're buying something for 11, 12, and the current market rate is 8, 7, 8, 9. You're already on the plus side, and there is no rocket science. Just go ahead and do that investment and see now what value add, what upside you have in that project, and
Mhm.
that's going to be additional money.
Yeah. I do want to clarify one question. There's been two questions asked. The first one is Dale asking, are you raising money for businesses only or real estate only? And the answer, Dale, is sometimes it's just businesses, sometimes it's businesses with real estate. So, for example, and I'm going to go ahead and toot this horn now while we have people online, we're doing a Zoom this Saturday for accredited investors who want to buy a hotel with Manish. And the hotel is both the real estate and the business. Could we talk a little bit about what that upside is on that hotel, Manish? I know this is a super exciting project.
Yeah, so it's a Double Tree by Hilton. It's a branded hotel in Gilbert, Arizona.
Hmm.
As you know, we only invest in Arizona. Since my team is here and we are here, it's easy to manage and easy to operate.
Hmm.
So this hotel is right now managed by a third party company, and they are charging leg and arm for this particular. Their expenses are like everywhere. That's one thing. Second, it's got a 10,000 square foot conference convention center, which is very underutilized. I will not invest in a hotel if there is no upside to it. And this convention center, Ingrid, one of my friend owns a Chatulux. If you know a banquet convention center here in Phoenix,
Hmm.
and she's doing great. She's doing phenomenal. And Chatulux is like really a premier destination for weddings, parties, you name it, conference and our business conferences and all that.
Hmm.
So, when I saw this conference center parcel attached with the hotel and 10,000 square foot, very underutilized, only doing 750K. And my friend, she's doing phenomenal with her convention conference center. I was like, dude, this is gold, because they are only making 750K in revenue. Uh, and this thing should not be less than 2 to 3 mil uh,
Hmm.
easy. And Gilbert, Santan, and the area where it is close to Top Golf, it's a premier destination for all kind of functions, weddings, corporate events, birthday parties, you name it. And then I have a
Yeah.
friend who wants to do every weekend some parties there. Oh my God. So I was like, this is, and then it's got a hard liquor license, which is they are shutting the bar at 5 p.m. Who closes the bar at 5 p.m. or maybe 6 p.m.? But who does that? So both, there are so many angles this business should be done properly. But the owner is kind of 85-year-old woman, and she wants exit. So
Got it.
that's a very interesting project, and it can be a awesome deal for our investors. And as you said, we are looking for accredited investors. The big plus investing with Awesome ROI, they will get pref returns from the month one.
Okay, so let's take this a little bit slower, especially
Okay.
with people in I'll say my sphere. I'll be honest with you guys, I'm just learning so many things about funds and like how people do their capital structures, like using terms like capital structures, which technically you do in single family too, but you don't call it like your cap stack. It's got its own sort of verbiage when you start raising capital or looking at deals on the commercial side, even inclusive of multifamily. I still very much remember sitting in a room with Vina Jetty when she's like explaining how we don't say PML in multifamily, we say LP. And I was at Rhea Campbell's conference for the Halloween weekend. And I was at a table with Beth Azer, who's a very well-known commercial investor, and she was talking to this other friend of mine. I think it was Trevor, and they were speaking two completely different languages because she was talking about LPs and he was talking about PMLs, and she didn't understand what it was. And here's this lady who's making millions and uses LPs, but didn't know what a PML was. And so I took it upon myself to bridge the gap. And I'm like, guys, a PML, private money lender, is the same thing as an LP, which stands for limited partner. And a limited partner is somebody who invests passively. So if you're an accredited investor and you have like 50K, 100K, maybe $1 million from a 1031 exchange scenario, you put that money into an investment. You make sure you do all your due diligence and you understand what you're getting into with awesome operators like Manish. And you basically just mailbox money at that point. You get your returns through very passive ways. Whereas a GP or a general partner, a GP actually has to run the projects and be very active and make sure that the operations are good. Like what Manish was just saying, there's a lot of upside in this hotel because the event center isn't being it's over 10,000 square feet, right?
Yeah, yeah. With
Uh-huh.
its own kitchen, with its own,
Commercial kitchen.
patio and all that. Oh, it's beautiful.
Mhm. It's underutilized. The management costs for this hotel is more than it should be. So again, these are all levers in business and in commercial real estate that you can add more value to the actual hard asset if that hard asset is making more money. And again, with single family houses, co-living kind of is like the tip of the iceberg of attempting to do stuff like that. But in all sincerity, commercial is really where you can really rev up that engine in terms of NOI. So very cool. Okay, so now we've explained to the people what an LP, what a GP is, in case you guys have again, like me, when I first started real estate investing, these terms were so intimidating. Like I would just sit there and listen and not really understand it.
Right, right.
So, as you can see, Manish, I try to be educational so that people can understand and walk away with what we want them to make sure they
Oh,
grow.
yes. That's
So,
good.
all right. So, okay. So there's this amazing hotel that has an aging owner, which is something we're seeing a lot. And that's why I also think business buying right now is such an opportunity for anybody out there trying to be an entrepreneur, because we have the senior tsunami, right? So many people are like their families don't want to hold down that business. They don't know what to do, and they need to find people like Manish to sell these businesses to. Correct?
Right, right.
Hmm. Would you say a good portion of the businesses you've bought recently have been because they're
Oh,
aging
yes. Not only aging, sometimes people buy businesses to work themselves in those businesses, and that really burn them fast. I
Mm-hmm.
have seen the convenience store, liquor stores I have bought in the past. I have bought from people who were working themselves in those stores, like for years, and they were tired and they were burnt out. And that's a good business to buy because, and the other thing, they don't know anything about local SEO or how to bring traffic to their stores. And those are the things I keep doing, or I have a team who does that in the background for all my businesses. Because businesses nowadays is not just on-site customer service. It's about reviews, Google reviews, Yelp reviews. It's about, maintaining the ranking on the top three, because nobody goes to the fourth or fifth or the next page of the Google. They all want to do things. They just stick to the page one
The top
of the Google.
results. Mhm.
Yeah, the
Well,
top three.
especially when we're driving, we're like restaurants near me and I have to find something close enough right away. So I can imagine. Yeah, we're too lazy to go to page 2. Hmm.
Yeah. And if you're on top three ranking, that's where you get the phone calls, you get so much response, so much foot traffic. So those are the parameters we do on all our businesses. And we have seen tremendous results if our businesses are ranked good on Google. Now we're talking about Chat GPT and AI tools. Now it's not just SEO, it's GEO, like it's GEO is basically all the AI based optimization. So it's not now we have seen 25 to 30% people, they go to Chat GPT and they ask for a liquor store near me, or liquor
Mm,
store that keeps these products, or they name the products, or that keeps this kind of beer or wine or whatever. So
mhm.
now it's not limited to just Google SEO. It is people are going to all kind of Chat GPT or Google Gemini or you name it. So you have
Do
to be
you use
optimized.
do you use that too then for like brand recognition? So for example, you just said, do they have this brand of beer or this brand of liquor or whatever? Do you use that to also make sure that
Oh
you are
yes.
stocked in
I
that
don't know if
inventory?
you know,
Yeah.
Buzz Balls is a new beer
No.
that's going crazy. I mean, people go after Buzz. I mean, Buzz Balls sells like no other brand we have ever seen selling.
Really?
And yes, so we have to optimize all our social media sites, or whether you name AI or Google, to have all the flavors of buzz balls and all the buzzwords related with that. Not only in the
Mm,
keyword section, you have to have it in products and everywhere. I mean, you have to just dump those keywords in every sphere you can possible.
yeah.
Yeah,
Yeah.
it's that. Yeah. So you have to play with all those products. You have to promote your brand. You have to promote the services you provide, and you have to promote. On the top of that, you have to keep collecting positive or reviews, and we have a SOP for that. How we collect all those, and you have to be at 4.9 or more. If you go to any of my businesses, you will see they're all 4.9 or 5. We don't allow any of business to be less than that, because 5 sounds shady sometimes, but
Mhm.
4.9 is where you want to be. And it's so it's a mix of 10 different things that makes your business successful. It's not just be a good operator, be a good service provider. I mean, those are important things, but nowadays you have to bring new customers to your store, foot traffic, and that can only be done if you are tech savvy and you know what works, on social media and what doesn't.
And even if you're not tech savvy, know enough that that's something
Correct.
your business needs so that you can delegate it out. So that's really wonderful.
Yeah, I say a little bit. You have to know SEO or local SEO. I mean, I understand if you don't know the ins and outs. Like you don't have to know how to build a website, but you should know if your VA is working on some project, how much time that project takes in the SEO, so that he's not fooling you.
Hmm.
Now, if something takes 2 hours and he's working for 2 days, you should be in a
Hmm.
position to figure that out and point him and tell him, hey, dude, 2 days, what are you doing?
Oh, wow.
So
Yeah.
stuff like that, at least a little insight or know-how, is not a bad idea.
Yeah, that makes a lot of sense. Very good. So, what I heard you say is when you're buying a business, I would say don't be alarmed if, especially if your business owner is a little bit older and they don't have digital presence, if they don't have, like one of the things you taught me when we walked one of your business, this business is missing, the cigar room, for example. And
Right.
if it had it, then, you can add to the NOI, but you can also add to the customer experience. And so this becomes somebody's favorite, liquor store as an example. Um, can I talk a little bit about the tip structure that you do with your employees?
Oh, yeah, please go ahead.
Well, when I was getting to know you, and I actually talked about this with a few people who were in sub 2, because you're in sub 2 too. It was kind of cool how we met, but I was paying very close attention with how you talk about your employees, and how you would refer to them as your team members, and it was a we, like us, versus a they and you. And I was like, that when that is already incorporated into the language of how you speak about the people that work with you, it really is a way people show you their values. And I noticed that right away, and then when we actually went to one of your businesses, you're like, "This is what I do with the tips." The customers leave the tips, and the tips are left for the employees only. The business does not take from the tips. So for me, I'm like, "That is so fantastic," because I've used to be a waitress. I used to be a bartender a long, long, long time ago. Long, long, long time ago. And we used to have to split it with the house. And so knowing that you are, in my opinion, properly incentivizing the team, and it's really on their performance and how a customer feels when they walk in the door, that they're gonna be able to make their, like, little mini bonuses. So, but first,
Oh, one of my best stores, and I think you came to the Mesa, right? Each
yeah,
employee is making like 500 a week in tips,
yeah,
and
on top of their salary.
on
Mhm.
top of their wages. And
Yeah,
the good thing is, that's one reason they don't want to quit working with me, because they are like, man, what other place pays that kind of bonuses or tips or incentives?
yeah.
So you have to excite or delight your employees as well, not only your customers. If your employees
Mhm.
are excited, delighted, and don't know. And one other thing we just started doing, we are acquiring more businesses, and we could
Mhm.
have never done that without the support of our existing employees. And I was telling my main manager, hey, whatever stores we acquire, we should give not like a big chunk, but a certain amount we have to figure out to our existing employees, because they will get the sense of belonging. Because if they know we are growing, they also know they are growing as well. And
Yeah.
they would like to do more, they would like to contribute more. And if they know outside their work and their tips, they are going to get more because we are growing and we are acquiring more businesses. They'll be doing their job even better. So
Yeah,
what
I
I'm
love
saying is,
that.
they will,
Mhm.
instead of giving them stock options, because these are not like blue collar, blue chip companies. We are convenience store, liquor stores, and laundromat. So give them cash every month, and they will be
Mhm.
excited. Wow, what is this for? This is for your loyalty. And I told my manager, we don't give it to someone who just joined us. He has to be working with us for a year or more,
Yeah,
before we
vested.
can, he has to be vested. Yeah. So those are the things. If you respect your employees, they will respect you and respect your business, and they will have that sense of not only belonging, they will have a sense of ownership, and they
Mhm.
can do things which you don't even think one can do.
Yeah, very good. I love that so much. And let's talk a little bit about the types of businesses that you focus on. So we've talked about liquor stores and convenience stores. We're looking at this hotel in Gilbert, which is can we run down the numbers a little bit on the Gilbert property? So it's a $25 million purchase.
It's doing 6 million in the hotel revenue,
Hmm.
and including bar and conference center is doing around 7.2 million in revenue. And if the third party who's managing the hotel, if they are not there, then this hotel should produce 3 mil in net income, annual net income. And 3 million, if you do the math at 25 million purchase, you'll see. I don't have a calculator in front of me right now, but I can still, yeah, 3 million divided by 25 million is almost 12% cap. So 12 cap is what I said. I don't buy anything below 11, 12 cap because it's not worth your time. And if you do check on CoStar or LoopNet or Crexy, the hotels are getting sold at like 5 or 6 cap.
Yeah,
And you're already 6% on the plus side before even running a hotel, or
yeah.
even putting a step in, or even operating. Day one you're already 6%
On the
positive.
green side. Yeah,
Yeah,
yeah.
the
That
green
makes
side.
sense. Mhm.
And now all those plus sides, or the value add, or the upsides we talk about, to get rid of that management and run yourself with your people efficiently, and you're going to save money there. I did the math. It was around 4 to 500K savings a year if we get rid of those
The
uh,
third party
third
management.
party management.
Mhm.
And the conference center, as I mentioned, it should do 2.5 to 3 mil in addition to what it's doing right now. But on the low side, conservative side, 2 mil, you know 2 mil. And then the bar is another half a mil. So what I'm saying is it's got 3 million conservatively,
Upside.
upside.
Mhm. Mhm.
3 million means, another a million in your pocket,
Mhm.
and million plus three is like four, basically 4 to 5 million in net income. You can stabilize that in 12 to 18 months time
Yeah.
period.
Yeah. And again, because this is commercial real estate and a business, then you use the NOI process of finding the value of your property. So think about it. If 3 million is the revenue for a $25 million business and you're almost doubling it, you can almost double what your
Selling,
property
yeah,
worth then. So this is just simple arithmetic, right? Not really difficult. This is like third grade math. If this equals this, then this will equal this, right? So if the 3 million can be duplicated to, 5 or 6, then the 25 million can almost be duplicated to, like, we'll call it
exactly.
45 to 50 million. So,
Yes.
um, what single family house can do? It
Yeah,
just doesn't
no.
work that way. Not even multifamily, guys. So, we are definitely going to deep dive into this a whole lot more on Saturday. We encourage all accredited investors to sign up for the Zoom on Saturday. If you can't copy and paste or whatever the link that you see on the page, then please DM me on my Instagram at Ingryd_Hernandez. Just put Zoom and I'll send you the Zoom link for Saturday so that you can educate yourself about these very cool accredited investor opportunities that are out there. Okay, so we've talked about your hotel, we've talked about the liquor store and the convenience stores. Let's talk a little bit about your your perspective on shopping centers and this really cool laundromat that you're working on.
Oh yeah. So shopping plazas are a gem of investments. I think in today's time, if there is a number one asset class one should be investing in, is should be a strip center shopping plaza.
Mm-hmm.
Um, Areas, I mean, especially in Arizona, every area is growing. We are getting a lot of new influx of people, and everywhere the businesses are added, and the way it's added, there is limited space. Everybody is make building multifamily or single family. They're talking about housing, but nobody is talking about the commercial side of it. Like, you need those many shopping plazas or strip centers, right? And the thought process is not working, the investors. And I'm excited. If they are not thinking on those lines, it's good. Let's take care of that child. We
Yeah.
take care of that area, and that's why shopping plazas are doing so good, especially in the areas I am in: Mesa, Gilbert, Avondale, Buckeye. There is 0.5% vacancy, not even one,
What does that mean?
0.5%. That means there is hardly any place. That means more plazas are needed,
Mm.
more strip centers are needed, more shopping concept places are needed.
Mm-hmm.
And
Something that Beth Azor educated me on. She said she's very bullish on commercial shopping centers as well. She did say, however, avoid elbows. Do you want to talk about what an elbow is?
elbow in the sense,
Okay.
okay, yeah,
In the
elbow,
shopping
you're talking about
centers.
the shape. Yeah,
Yeah,
yeah.
yeah.
Yeah, so one thing I don't do is big shopping plazas with big anchors. Let's say if there is a Sprout or Albertson or some gym, let's say Mountainside Fitness or LA Fitness or name any other gym.
Yeah.
They're all there. If they leave, then you are really in a bad spot, because you are paying mortgages every month, and one of these main tenant leave, then you are in trouble. And the same with the elbow concept is like, you need a simple plaza. It's like, facing the main road wherever it is, and the traffic can see it. You don't want something like half of the plaza is not facing the road and half is. One, you will not get consistent rent from all the tenants, because they have a justification why I'm not facing the main road, why you're charging me. So my point is, have a plaza that's consistent to all the tenants, and they have no one has to complain that I'm not getting the kind of foot traffic like others are. So yeah, if that what you're talking about from the elbow point makes sense. But honestly, you have seen my liquor store in Avondale. It is a little bit on the inside.
Mm-hmm.
um, our foot traffic is very good there too. It's not like, again, foot traffic can be increased using all these SEO, GEO, Google. Nowadays, you don't have to be facing a main road or facing some kind of a big junction, like intersection. As long as your business have a good customer service and good SEO, GEO in place, you'll get traffic. So,
Mm-hmm.
that's something from the past. Like, you have to be in a good neighborhood, and you have to be in good area to get the business. But um, somehow, if you are not visible to the people, you don't have to worry. There are ways to bring foot traffic.
Yeah, very good. Well, so what I'm hearing you say is when you're looking at shopping centers, the anchor, what you mentioned, is where you have these big shopping plazas where one big store, think like a grocery store like Fry's or
Yeah.
for my East Coast people, like the Aldis or Kroger's, where they take up such a big space. And if that one tenant leaves, you're kind of SOL unless you have a plan already. But can we talk a little bit about these strip shopping centers you do have? And when a tenant leaves, why does that make you happy instead of
Yeah,
sad?
I get very happy because now I can add my own business in that location, and you know what, um, Ingrid, if you have a tenant, if he's paying you X amount of rent, right? If you run your own business, even though, and you have to have SOPs and employees and proper structure in place, you will make 5x for sure.
Mhm.
So, are you going to worry about the X amount in rent, or you're going to be happy about 5x of that rent income what you're making? So if you are getting, let's say, $10,000 in rent and you are making 50,000, obviously you would like to have your own business in that location. And there are tons of businesses. In fact, city tells you what business they think you should put there, so that because they have done their research and they know for a fact that business will do great, so they come up with incentives. They tell you, if you do this, we'll help you with this, or we'll help you with that. We'll give you no headache with the approvals. We'll be partnering with you in all aspects, so my point is, I I'm not happy, like, if the tenant is quitting or leaving, but inside my business side is excited. I'm like, okay, now it's time to put my own business in that location, and that will yield us better returns to me and my investors.
Yeah. Yeah. It's given you already a head start on what works in that space.
Correct.
Mhm. Very good. Very good. Um, so let's talk a little bit about your fund, which I think makes it a little bit easier for people who kind of want to be in on these deals. But obviously, there's just so much knowledge on what you're presenting. And if somebody is newer to this or doesn't want to spend all the time in all the very cool experience and understanding that you have, you've created a fund, right?
Yes.
And
Yes. So
so,
I own a 506C Reg D fund. These are like SEC terminologies. 506C is, and there are different funds. 506C is where I can promote, I can do advertising for my fund rather than, and 506B is a different fund where you're not allowed to advertise. You can only raise capital with the people you know,
mhm.
or you have a group of people. I mean, but you cannot do advertising on that particular. So 506C Reg D is the fund I own, and we have a $20 million raise equity, and the debt is it's a debt and equity fund. Our total capital acquisition right now is 75 million. So 20 million is on the, and the good thing is, uh, from the equity side, I'm talking about, as I just gave you an example, we gave one exit to one of our 1031 exchange investor. He got 33% annualized return, 32, 33. Um, so I'm not saying that will be the case every time. It could be more, it could be less, but our intent is to delight our investors so that they come back for more investments.
Yeah.
And the good thing is, um, all our projects are in that range where they can expect that kind of return or even higher. And they get distributions. Distributions is like monthly, uh, what do you want to call it? Like monthly payment
Mhm.
on like interest payments they will get from the day one, from the month one. And the biggest advantage they have with us is $0 or tax benefits. They don't have to pay even a penny to Uncle Sam for their investment. We help them. We help them with the cost seg. Cost seg is one of the component in commercial real estate where you can show the depreciation. on your investment to the point where they and then deductions. Like at the end of the day, if somebody is investing 100,000 with us, they can write off the whole 100,000. They don't have to pay even a penny to Uncle Sam. It's dollar to dollar match. That's one thing. And then second thing is important is they will get waterfall. If your audience doesn't understand, monthly interest rates are one thing. On top of that, quarterly, every quarter they get the chunk of profits, whatever is left. Let's say we have paid to the main lender, whoever is lending 70-80% LTV, and then this equity injection is coming from the equity investors, so they are 20% partner in this game, right? So whatever is the amount they are investing with us, they get 70% of that investment every quarter on top of monthly interest rates. So 70%, when I say, let's say somebody invested 100,000 and we have 100,000 left at the end of every quarter, in profits after paying everything, so they get $70 out of that. If they, I mean, it all depends on the investment level of investment they have done. So they make money from the interest every month, which they will get irrespective of anything. And second, they make money from the equity. And then there are layers. Once they receive 15%, then our relationship goes from 70-30 to 60-40. And once they receive 20% interest every year, then our relationship goes 50-50. So those waterfall, I think you have to explain them better
Yeah.
than I can,
So, so the way that I'll restate what you said and what I have been learning. And again, guys, this is new information for me too, as I learn about how funds structure themselves and how waterfall payments is an approach. Okay. So if you're an investor, and again, this is all educational, if you're an investor and you invest in a certain level. So for example, for Manish's fund, there's 3 levels. There's class A1, A2, and A3. And let's say you're at the top tier, right? The top tier gets an 8% pref return. So preferential return, meaning you're going to make that interest on a monthly, like it's annualized, but you're going to get paid out every month. So for all, for illustration purposes, let's say it's 100 grand, 100 grand gets
8,000.
uh,
8,000 divided by 12.
8,000 is what you make on that 100 grand on an annualized basis. However, for your quarterly distribution, so that's part 1. Part 2 is that you also now get to participate in the cash flow of the business. So if there is enough cash flow, there's a term called IRR, internal rate of return. So a pref return at 8%, now you're at 8. You're a 70-30 profit share partner split exactly at 70-30, meaning you'll make 70%. Manish and the fund would make 30% until your internal rate of return is at 15%. And then it goes down to 60-40 split for you until your internal rate of return goes into 20%, right? Because you start at 8, now you go to 15, then 20. And then anything past 20%, now you're at a 50-50 50-50 profit split. And then so the 50-50 piece, if Manish is an amazing operator, and he is, historically, Manish has been able to pay out to his investors using this waterfall method, above 30%.
Yes.
And again, for someone like myself who has invested in single family houses, these types of returns only make sense when you're fixing and flipping and you're returning, and these take 9 months, maybe a year to see those returns come back to you. And so in Manisha's fund, part of the expectation, it's a 3 to 5 year commitment. Is that right?
3 years at least, or
Yeah.
even 2 years if depends on the economy and the situation. If the economy is great and the exit can happen during that time, we'll take an exit or we'll refi. I mean, so it different factors,
Yeah.
but definitely 2 to 3 years is minimal, and it could go up till 5 years.
Right, right. So again, from like a single family house experience, these types of returns, when I'm trying to raise capital with private money lenders, aka LPs, it's really difficult to achieve those types of returns. And so my brain was blown when I was like, wait, what do you mean you're giving your investors historically, into the 20s and 30% returns annualized? And he's like, yeah, I use the waterfall method. And this is how, because these are businesses and you're leveraging the value add propositions that they bring to the table, you're able, and to use Manish's term, to delight your investors. So imagine if you're an investor and you're getting these kinds of returns, do you think you're going to tell your friends and family? Absolutely. Like, especially when you have an operator that's been in business for over 25 years, because that's somebody who's seen a lot of seasons of battle, who's, even myself, having been in real estate investing for 5 years now, close to 5 years next month, like you, you've seen a lot in a short amount of time. And if you are somebody who has not quit, you're somebody who definitely gets awarded in the pivoting stage. You have to pivot. So I can
Oh
only
yeah.
imagine all the battle stories that you have, Manish, in making sure that things work out with your businesses.
Oh yes. Oh yes. There are, and everyone's life involves battle and wars, but the it comes down to how you take them, and you keep going, you keep striving, you keep doing, you keep showing up. Is all it's all about, so uh, my journey is not special. I never say that and never claim, but the fact of the matter is, I keep doing what, and I'm very passionate about what I'm doing. I source deals like no one can. um, People approach me. People ask me how you find deals or how you source deals. I'm like, I never go after deals. They come to me, because once you do 1 or 2 deals, then the other brokers or other sellers, they can see it online, the comps, and they call you, and they are like, hey, I have a similar kind of a business or similar kind of a real estate. Are you interested? I'm like, okay, send me the email. I'll look into it, and if I see it attractive, I'll send you an offer.
Yeah.
So it's that simple. You have to jump, you have to make a leap of faith, and then things start running, or things start happening from there.
Yeah.
Take a leap of faith. You work passively, actively. I tell people, just do it. Just do it. Sitting on sidelines can help you so much. You have to jump, and you have to take a leap of faith, and then you see life will not be different. It's gonna be amazing.
I love it. Awesome. Well, I know you're focused on raising capital for this hotel, and want to encourage again everyone, if you'd like to sign up for the Zoom, it's this Saturday. And if you can't copy and paste the link, because I understand it's hard to copy and paste when you're in YouTube, just DM me on Instagram the word Zoom, and I'll send you this link to register for Saturdays. It's at 10 a.m. Arizona time, which is 9 a.m. Pacific time, 11 Central, and 12 Eastern. Look at that. Woof. So definitely reach out. Would love to kind of dive a little bit deeper on what this hotel has to offer, why it's so exciting, especially since it's in Gilbert. And obviously, we're going to have you back, Manish, because one, I'm working with you now. We're partners, can't
Right.
help it. But the other is, there's just so, like you mentioned, there's so many deals in your pipeline. I'm
Oh my
super
gosh.
excited. Like, it's crazy. Like, how do we focus? There's just so much.
Yeah, yeah. And
Um,
when these people, they send me more deals, I'm like, what do you
mhm,
think? You don't have any other client, or you don't have any other audience where you can take your deals? I'm like, you just close it and you paid a good money for your deal. So we
mhm.
want to follow with you. See if you
Yeah,
can close this as well. I'm like, there's so much I can do.
yeah,
So I can put it in my back burner, but I cannot promise. Yeah, but I have close to 40, 50 shopping plazas in pipeline.
Yeah, let's
And I'm
go.
not even, yeah, on top of that, business acquisitions, so many liquor stores and laundromats they want. And there's this guy who owns 60 laundromat in Arizona. He wants an exit. And I'm like, okay, we'll talk, not now, but those kind of deals. So,
I love it.
serious
Mhm.
deals.
And that's what gets me so excited too working with you is that these opportunities have they're just explosive. There's
Yeah,
just so much to them. And again, I get really jazzed about just how many different levers there are. It's about your digital presence. It's about how you treat your employees. It's how you manage your inventory, how you make sure that the asset is being taken care of. And I think that that's exciting for me because there's
all
just
the
it's
SOPs
multifaceted.
involved, all the system
Mhm.
operating procedures for everything for employee when he
Yeah.
step in, what he
Yeah.
has to do and how he close his day, how he
Yeah.
closes, all
Totally.
those things. It's totally, we have SOPs for everything, even for
Mhm.
collecting reviews. What is the process? All that,
Yeah.
it's
Yeah.
a systematic process.
And then I also told Manish that when we buy this hotel, we must have the Creative Nation Tour event with Pace Morby at the end of February there. So I'm still working on that. So please help us buy this hotel so
Yeah.
that we can have such an amazing space to really kill it and have a really killer party. Because that's when Pace is kind of finalizing his tour, and then we get ready to go to Squat Up Summit in the middle of March. So I'm excited about what this hotel could do, and really
And
bring
Ingrid, whoever
together.
invests in this hotel can have a moment of pride, or they can take their friends or family to show, hey, this is our hotel. We
Yeah.
are investor here, and it's gonna be a pride moment for all the investors involved in this investment. It's quite a property, and the area is upcoming. Oh my gosh! And you can share the address in your next uh, session. And so that, yeah, it's and then the same owner has another resort for sale in Scottsdale, but she wants to see how we do this closing, and that another, and she wants an exit because she's really done
Oh.
with all these
Mhm.
businesses.
Well, guys, we would be excited to have you investing with us for sure. If you haven't done so, go to creativenationtour.com and make sure you're signing up for the event at the end of February, which I think is assigned to Mesa, Arizona, even though we might be doing it in Gilbert. And then if you haven't done so, please register for the Zoom on Saturday. Manish, if people want to send you opportunities or want to get to know you, where should they reach out?
So my email is deals, deals, deals at awesomeroi.us. It's not .com, even though I have a domain .com, but the email is not .com. awesomeroi.us. That's my direct email. Otherwise, they can find me in LinkedIn, Insta, Awesome ROI on LinkedIn. Awesome ROI is on Instagram, everywhere. Awesome
Awesome.
ROI. Otherwise, go by my name, Manish Pushye, and they can connect with me.
I love it. Well, thank you so much, Manish, for coming on the Explain It podcast. I'm excited about what 2026 is going to do for
Oh yeah,
us and just all the amazing. Again, I have to credit you in so many ways because doing fixing and flipping in Arizona kind of got me down. I don't want to sugarcoat anything for you guys. And the fact that I just sat with Manish, I think the first time we had a really strong meeting, it was like 3 or 4 hours that we sat together. And you were just talking about all of these opportunities. And I'm like, it really jazzed me up. It got me excited about having quit like the W-2 and being an entrepreneur and really just how much Arizona has to offer.
correct.
And I'm very honored and grateful that I even get to just hang out with you and all of the stuff that you're attracting, like these amazing opportunities. So I really believe 2026 is going to be a kick-ass year, and I'm excited to do it with you.
Awesome, awesome. And likewise, Ingrid, I am enjoying working with you. Hopefully, 2026 is gonna be our year.
Yeah, I love it.
All
Well,
right.
thank you guys. This has been the Explain It podcast. We're here every Wednesday at 1 o'clock Arizona time. Follow me on Instagram or on YouTube. Make sure you hit the like, hit the subscribe, and we'll catch you guys next week. Have a good one.
Take care. Bye now.